The markets are shifting fast. Are we on the verge of a major breakdown or a deeper correction? Today's Market Waves dives into the latest technical moves across key asset classes. Volatility Index, signals of turbulence ahead. TLT and yields, bonds at a critical turning point. Natural gas and oil, energy markets heating up or breaking down. Major US indices and S&P 500 sectors, trend continuation or reversal. Large cap stocks, key players leading the charge or showing weakness. Special feature, Elliott Wave analysis on Amazon. What's next for the tech giant? Stay ahead with expert Elliott Wave insights, technical breakdowns, and trend forecasts. Subscribe now to Investing Angles for real-time market updates. Let's begin with volatility. What we are seeing here is a clear move up after a very strong bullish engulfing candle, and which also consolidated and formed a double bottom that we discussed in our weekly review. So far, no surprises here. We are expecting it to continue higher tomorrow. And if we look at the 2-day frame, this is a very strong bullish candle also. And on a 3-day frame, which also closed today, there is also a confirmation of a bottom with an opening channel upward. The same thing is happening for the futures. So far, volatility is on the rise. Now let's move on into the next section, which is bonds. So what we are seeing here, our favorite TLT. TLT is at a failure. Today, it wasn't able to close above the high of Friday, and this is considered as a mild bearish formation, potentially at the first signal of a proximity to the top. Well, that's something to be monitored. So far, the trend is bullish, and the candle is bullish either. But we have to be very careful here. And I'd like to emphasize the weekly closure. The weekly candle failed to close with a bullish candle. It was at least, at best, neutral. Let's see how TLT goes on. And if we look at the TLT chart, what we are seeing here is a potential for an ending diagonal. That's the very ballpark estimate at this moment. So far, the most important, that's starting with the middle of January, TLT failed to form a strong impulsive or motive wave upward, and this wave, the structure is corrective. So what will happen next is a big question. So far, we are seeing corrections in both directions. And if we look at the smaller frame, it's not clear at all. Something that we projected late last week. So far, this is potential zigzag before moving lower, but we shall see how it goes tomorrow. So far, we are neutral on TLT. And if we look at the yields, what is also interesting here is that while all candles are red and we are expecting, perhaps tomorrow, we are expecting a lower lows, but I'd like to say that the 20-year and 30-year, they might start forming a bottom, because today they failed to close at the new low, and it looks like the at least 20-year is finding a good support at the 100 days moving average, which is a purple line, and tomorrow we might see another consolidation candle before we can see a reversal. All right, so that's the Treasury Department. Now let's move on into commodities section. What is happening right now? So natural gas. This is the chart that we shared with our subscribers back in February 21st, and so far we are seeing that it hit the target with precision. The question right now is whether there's going to be wave 4 or it's just the first wave, wave A, of a bigger wave too. Now let's have a look at the candles. Maybe they can have some answers for us. This is the closure today after a healthy scare that was given everyone in the early morning. Natural gas recovered, and from the candlestick perspective, this is a bullish formation. This is a bullish formation. The three last candles potentially forming a rising three methods, and this is considered as a bullish formation. So far, everything is above major support levels, and the next move would be reasonable to expect a move upward. And if you look at the 3-day closure today, it's not a strong bearish as well. So the candle is red, but it's an incomplete dark cloud cover. The chances for it to resolve upward are stronger than the bearish ones. Okay, so now if we consider this and we return back to our chart, so this way the red path is more probable at the moment. Okay, so that's all for natural gas, and let's have a look at oil. What is the other energy commodity is telling us? After a very strong bearish formation on Friday, we have a healthy bounce, and so far it's a very small one in order to be considered for bearish reversal. If we see a very strong bullish candle tomorrow closing above Friday's high, it would be a reversal, no questions asked. But I would like to say that this is an improbable scenario at this moment. And if we look at the 3-day closure, which is wrapping up in 30 minutes, this candle is bearish, and I think that this elevates the bearish odds on their larger frames. After this big red candle, we have a very weak bullish candle, and now we have a stronger bearish candle. Most likely we will see lower prices, and if nothing happens between now and Friday, this is gonna be a big bearish closure of the months. February bearish engulfing. That's the candlestick's perspective, and let's move on to our Elliott Wave. This is our chart. It remains unchanged since the end of December, where we called a move up and then move down. So oil is almost 12% of the top right now, and we have a chance to see lower lows at this moment. So if you're interested in a deeper discussion and smaller charts and targets, you can check our website investingangles.com for our weekly reports with lots of discussion and lots of high quality charts with for short, long, and mid-term perspectives. So yes, and now let's move on into the stock market. What we are seeing here, this is our daily closure of the major indices, and they are ETFs, SPY, QQQ, DIA, and IWM. What we are seeing here is fairly clear. We have a healthy bearish continuation candles for S&P 500, Nasdaq, and Russell. Dow Jones is pretending that it's trying to form a bottom. Let's see how it goes tomorrow. So far, we have two closures below the 100 days moving average, and this is also bearish. If we look at slightly bigger closure today, this is the 5-day frame, which also closed just a few minutes ago. What we are seeing here is an entire bearish engulfing. I'd like to emphasize entire one. So it completely engulfs the candle, the body with a lower shadow. This is stronger than the usual one. The same happened for Nasdaq. Dow Jones technically confirmed a top here, and the same thing happened for Russell. So they are the last two are the most bearish one at the moment. And another thing that we keep an eye on is the monthly closure, potential monthly closure. So far, S&P 500 and Nasdaq are kind of holding neutral, leaning bearish. Dow Jones is leaning bearish, and it looks like Russell is going to confirm it. Let's see what the other 4 days bring. Now let's have a look at Elliott Waves. This is S&P 500 micro level. What we are seeing here, this is the chart that we shared back in yesterday before in our weekly report, in our weekly digest. So what we are seeing here, there are 2 counts. I would say right now we have an A, B, C potential here, but also there is a chance that there is an impulsive structure forming right now. So what I would consider, this is potentially as wave 3, then we might see wave 4 here and wave 5. That's a very ballpark estimate. We need to see a complete wave at this moment, but the wave is huge, and that's a concern, because by the time we might see the end of the wave, the index might be 5 or 7% down. Well, that's the perspective for now. We are tracking it, and as soon as we have stronger projections, we'll share them, obviously. And if we look at slightly bigger picture that we shared on Thursday, February 19th, saying that S&P 500 is about to form a huge diagonal that it started back in November. Well, so far, the aggressiveness of this wave down is confirming this hypothesis. If we see a very strong move, let's say in a matter of days or weeks, losing the index about 7% or more, we can safely say that it was a diagonal, and it might lead to much bigger losses. Well, that's the perspective, the midterm perspective for now. Let's move on to the next section of our discussion. Okay, so this is the index itself. This is the cash index. I just thought about it, and it looks like the index might have formed an impulse down already, and this would be either wave A or 1. And what I'm seeing here, potentially we might see a flat here or a zigzag going somewhere here tomorrow, and after that we might see another wave down. So far, I would say minimally the index completed an impulse down, which is a huge thing. And the estimate, yeah, let's not jump ahead. So let's see how this wave completes, whether the index decides to extend it lower before making a turn and forming a consolidating wave. Let's see, tomorrow would be a key day for that perspective. Now let's have a look at Nasdaq. So Nasdaq, Elliott Waves, the same thing, very similar. The only difference between S&P 500 and Nasdaq, so Nasdaq wasn't able to form a higher high, which I would expect for completing a diagonal, and this is what I'm talking about. So ideally, we would need to see a higher high here, potentially an all-time high. But so far, this remains the big question. And the wave itself right now, we have 2 counts. One is a typical normal, the blue one, 1, 2, 3, 4, 5. And another one, assuming that this was a truncated top for LP or green 5 count, and this is what is happening right now. What is index developing is just wave 1 of a bigger impulse. So both are on the table. and we are waiting for significant pullback in order to evaluate the perspective and the next targets. And after Elliott Wave, let's talk about S&P 500 sectors. What we are seeing here: financial, technology, healthcare, consumer discretionary, industrial, consumer staples, utilities, and energy. So these 8 I track continuously. And what we are seeing here is that technology and industrial and consumer discretionary are strong bearish, with bearish continuation candles. And what we would expect is to move down tomorrow. If we look at utilities, utilities also formed a strong bearish engulfing, and there is a good chance that tomorrow we'll see a strong weakness in utilities. Healthcare is technically bullish right now, and if you watched our video for United Health yesterday, it is expected, and this move is expected, and United Health might see at least a bounce, a short or to mid-term bounce before the next move. So if you're watching healthcare and you're investing in United Health, I would strongly recommend to watch this video and check what is next for United Health. But speaking about the charts, financial sector is kind of neutral. It just at the beginning it was kind of bullish, but it lost its steam and resolved to a potentially neutral doji, which right now requires confirmation for either pass. I would say that bears have slightly better odds here, but it needs to be confirmed. Technology and financial and industrial, and consumer discretionary. So basically these 3 plus utilities, they account for over 50% of the stock market. And if we add here an energy, which formed a neutral doji here, but with a very strong bearish influence from the perspective falling through method, bearish combo. So I would say that the only bullish ones are consumer staples and healthcare. So they account for about 13 to 15% of the stock market. Well, would they be able to hold tomorrow? That's a big question. Now let's move on to Microsoft and the big boys. So what we are seeing here is strongly bearish move, and technology candle kind of reflects it easily. So what we see, Microsoft is strongly bearish, and note that this tomorrow we are going to have a 50 over 200 days moving average death cross for Microsoft. And Amazon just lost its 100 days moving average, but we have an Amazon as a special feature later on. In just a few minutes, we'll discuss it in detail. Meta is falling. Nvidia formed a top, at least a local top. And if you look at the bigger candles, well, the bigger candles are not impressive either. So this is a bearish dark cloud cover, which has all chances to continue lower. However, we might see some bounce back. And Google is clearly falling down. Tesla, nothing special here, as expected. We discussed Tesla in a couple of videos previously, and I can add a link somewhere here in the video so that you can go there and rewatch it. And Netflix is also falling. Apple is interesting, by the way. It tried to negate this candle, the bearish candle today, but failed. And if tomorrow Apple fails to close above Friday's high, it will be a strong bearish signal. Just be prepared for that. And now let's move on into the final section of our presentation today, which is Amazon. Amazon, if you followed us on February 4th, when we said that Amazon is forming a very strong formation, and this is ending diagonal of a serious size, and we were expecting it to move down. So this has happened. This is what happened exactly. Amazon is falling, and it's already fell through our target to 215.50, which we identified back in February 4th. So the question is right now that the wave looks very impulsive, and now the question is where it actually ends. And if we just try to estimate it, let's say this is the top, this is wave 1, wave 2, wave 3 would be somewhere here, end of wave 3, then wave 4 and wave 5, I would say minimally here. So that's 185, 180, 180 target area. So that's the perspective right now if Amazon continues, and technically candles support it, and I would say that the candles are more than alarming. This is the 5-day closure today, and it's a clear plain confirmation of a Harami reversal on the Harami candle, which is 1, 2, and the closure. And the Microsoft also lost a couple of major support lines. This is the 5-day frame. This is huge. And what is happening right now on the monthly frame, with 4 days left, we can have a strong inside down candle, which is an equivalent of a bearish engulfing, and this would be another strong nail in Amazon's. Okay, so now let's have a look at the bigger picture. This chart, this is something that we shared with our subscribers on February 4th, when Amazon was 244.06, just few basis points from a nominal top. After that, Amazon is falling, and it already lost 12.4% of the top. This was amazing call, and this is the perspective. If Amazon forms an impulse down, and we are expecting it somewhere here around 190, which is aligned with what we just evaluated here, 185, 180, so 190 is very close. This would be just the first wave down, and we might have another wave B, either a sharp and short, or more prolonged one as wave B, and after that we might have a wave C. If the first impulse is down completed, then we would be expecting 162, 143, somewhere here, the most typical retrace for wave 2, somewhere later in the year or early in 2026. That would be our expectation. Well, that's all for today, waves. If you like it, just support us with your likes and your subscriptions. Share the word around on YouTube. Follow us on Twitter, on Telegram, and on Reddit. Check our website, investingangles.com, for more reports. We issued quite a few reports on large stocks, on commodities, on indices in the last 2 days. And well, you can also check our free reader subscription for select articles and become a reader if you want to evaluate our services. That's all. That wraps up. I hope it helps. Thank you very much for watching, and happy trading, everyone.